Welcome everybody to another episode of Savage Cash. Here with me, Superman, your superhero of cryptocurrency. In this episode, we are going to be looking at what the F has happened with Bitcoin literally in the last half hour. I was going to be bringing you an episode of Savage Cash. This was the price at the time. The market cap was at $215 billion, nearly $216 billion. Bitcoin had risen nicely overnight and was sitting at 6,600 zone and in the late 6,600s. And then this happened. The price of the market, well, the price of Bitcoin tanked suddenly, altcoins tanked suddenly, and the market cap went down nearly $7 billion just like that. Just like that. So what the hell is going on? What caused the rise from the price it was yesterday, which was virtually this price, to going up and then down suddenly? If you're excited to know what that is, smash up ye old likes, smash them up in anticipation. Now, let me just make sure that I am live and all that good stuff, just so that I know that you can hear me and all of that. I'm not appearing currently on my YouTube, so let me just check on... Yes, right, okay. So, I am live. Let me just make sure you can hear me and everything. Yes, you can hear me. Good to see you guys. Glad you are here in this session with me. Lisa Marie is here. Say your name, say your name. And no one is around, you say, baby, I love you. Right, okay, so, what's been happening? So, if you have been following the price of Bitcoin in literally the last 15 hours, you will have seen that there was an enormous spike up in value. Now, I actually thought initially that the reason why that spike came up was because of the ETF decision, which is very, very soon. It's tomorrow. The ProShares ETF, or should I say the NYSE ProShares ETF decision is tomorrow. And initially when I saw the price, that is what I thought was the reason. But actually, the reason was very different. The reason was actually because of BitMEX. BitMEX went offline yesterday for maintenance and the price spiked. The price spiked instantly. In fact, it spiked literally in 1 minute. $300 in 1 minute when BitMEX went offline. Now, BitMEX, if you don't already know, is a place where a lot of people are doing margin trading right now and using high leverage, basically betting against Bitcoin, betting against the market, betting on Bitcoin going down and shorting, essentially. And what happened when the site went offline is that literally nobody could do anything about their positions. And in fact, there wasn't this big, massive liquidated machine that was weighing down on the price of Bitcoin. And then suddenly the prices absolutely spiked as they did. Now, I am not a massive fan. I haven't got an account on BitMEX. It's not an activity I want to get involved in, but it is certainly an instrument that has heavily impacted, negatively impacted on Bitcoin and not really allowed it to have much fluctuation outside of the 6,000 zone. Okay, because people are constantly betting on the price going down. And some people are going long on a positive, but most of the time people are looking to profit with cryptocurrency using BitMEX at a time when lots of cryptocurrencies have been bleeding. So that is a way to make profits at this time. So that has had an opposite reaction as well. So obviously BitMEX is back up. Of course, people are able to go back into, you know, their positions and start doing their gambling and betting against the market again. And having achieved gains on Bitcoin, they have basically taken them. All right. And as you can see, that happened in very quick succession. I mean, it happened almost instantly. You know, the price was basically sitting in the late 6,600s, as you can see, having achieved nearly 6,900. The price then went down and found some stabilization in the 6,600 area. And then almost just like that, a load of people were obviously cashing out on Bitcoin. And it took what happened in the last 24 hours, it cancelled it. It completely removed the gains and losses. Basically, you're back to your starting point from 24 hours ago. And that is without doubt market manipulation. Okay, now if you think about it, you know, what causes such a sudden drop like this? Now, in my personal opinion, it is a coordinated activity, a coordinated drop where either one incredibly rich person or a army of very rich people basically sold at the same time, or some positions were liquidated. Essentially, that is what may have happened, and then there we are. Price goes right down, and that is what's happened. And market manipulation is much easier with tools like BitMEX because it enables people to get rich even without Bitcoin absolutely thriving, the other altcoins absolutely thriving. They don't have to rely on that when they've got a very good profit-making instrument like BitMEX. And it is very frustrating. And this is exactly why an ETF is needed, because we need something really to counter the market manipulation and discourage the shorting. The shorting is really the activity that has gone against Bitcoin and is what has caused the market to plummet. So let's just have a look live and see if the market has plummeted anymore. 209,259. It may have recovered slightly. Come on, come on. Betting ends. Yes, so it's gone up very, very slightly. Okay, so Bitcoin has found some good support at the $6,430 zone. It appears that the price hasn't really gone below that, and as such, the altcoins have also had a drop down a level. Okay, most have dropped, although some are still in profit from exactly where we were this time yesterday. But if you looked at your block folios in the last 15 hours before you saw the price plummeting, then you would have seen your portfolio looking quite nice. But unfortunately, that has now been cancelled out. So this takes me to my next subject, okay? Because I think this is a very important subject. Because I have seen a lot of misinformation, a lot of people fudding on ETFs and saying they're probably going to be more negative in actuality than positive. And actually, like with what happened back in December, where essentially people bought in the run-up. People bought in the run-up when, essentially, when there was news that the futures was coming to cryptocurrency, that obviously led to people buying into it, anticipation of the price going up. Obviously, the price did go up. It then went into the news. More people FOMO'd in. It reached a certain point. The whales took their money out. Okay, and then from that point, futures happened, which basically allowed people to profit on the drops, I would say that it is one of the more significant reasons why the cryptocurrency market has gone down. And BitMEX has just accelerated that, brought a user-friendly platform for people to get involved in it, normal people to get involved in it, and attempt to short or attempt to get profits from the price of Bitcoin dropping. And this needs to go. We need to cancel out this era and move into the next chapter of the cryptocurrency story. One that reverses, essentially, the fortunes of the cryptocurrency market. And we have already seen signs of this. Obviously, as I've shown you already, Coinbase have added custodial services. Those services include cold storage and insurance. Okay, now these are very, very big for institutional buyers who want to do things by the books and do it in a regulated fashion, because obviously it's wild, wild west. Normal cryptocurrency investing and buying Bitcoin is still wild, wild west. This is adding legitimacy and controls into that way of buying for larger institutions. But now we need for the next iteration of this movement. Okay, now, as you will have seen this graph. This is the graph that shows really typically what happens when an ETF is introduced to an asset class. Okay, now, although this has been used to replicate kind of the price of Bitcoin and where we are potentially going to see almost at the exact point in time over this period, okay, these are different lengths of time, okay, these are decades, this is less than a year, Okay, this is like 7 months, all right? But looking at the exact graph and the movements of the graph, if an ETF comes in here, which is pretty much where that would be for September anyway, or very early part of next year, then this is the potential reward for the market. Okay, the potential reward. Yes, you heard me correctly. So, what I wanted to do in this episode is really dispel the myths and misinformation out there, because there are people seeing an ETF as a negative thing. And I think that it's certainly within my duty to inform and really set the facts, okay? So, as I see it. Alright, so this is personal opinion. What you're going to see now is pretty much exactly how I feel about it. It doesn't replicate anybody else's feelings about it. But what I'm going to be doing is I'm going to be telling you about ETFs, really so that you understand it on a very high level. You understand it at its most basic, okay? It's just basic. Because I think that that will let you understand exactly why it is so pivotal to cancel out the horrendous activity that we are seeing right now. Every short-term gain ends up being a short-term loss. You know, so therefore what we need to do is we just need to bring more money in and stop allowing the market manipulation to happen. So I'm going to go through this almost Savage Crypto style, the positives and the negatives, and tell you what my final thoughts are by rating what an ETF would bring to the party. All right, so let's get started. So I'm going to concentrate solely on a Bitcoin ETF at the moment because that is the one that's mainly on the cards. There are going to be more ETFs in the future that concentrate on different cryptocurrencies, a basket of cryptocurrencies, but really the Bitcoin ETF is where I want to be concentrating my efforts. So an ETF is a tradable fund stroke share on a stock exchange. Okay, so traditionally and what can happen in cryptocurrencies is you get involved in a basket of cryptocurrencies, okay? You get involved in assets, indirectly involved in assets. So you don't directly own it, just like you do now with your private key and, you know, with your wallet, and you keep it in safe storage. That is directly owning it. With an ETF, you are indirectly owning it. Somebody else holds it for you. They insure it for you. I'll talk more about that. But it's tradable. It's a tradable share on the stock exchange. Now, one share with the ETF that's likely to be granted equals 25 Bitcoin. Okay, so the profits, you know, people can essentially could trade it. Okay, so that's why it's called an exchange traded fund. Okay, but it is held by a fund manager, so that's how it's not necessarily a share. All right, so as I say with everything, it's not financial advice. This is my own personal opinion based on research I have done, and really I want to just tell you why this is so potentially game-changing, all right? And also at the same time, what are the potential risks of an ETF? And I want you to tell me afterwards, are you for or against? Or even if you are for, do you think it's needed? Okay, so let's move on. So what are the positives of an ETF? First positive is it's a regular way for large investors to own Bitcoin, at least own the asset Bitcoin, all right? What do I mean by this? Okay, so at the moment, you've got the Wild Wild West version. I've created a course about it. You know, you can basically, you know, have a fiat gateway like Coinbase. You turn your dollars into Bitcoin. You buy Bitcoin with your fiat currency. And that is the Wild Wild West way of doing it. All right, that is not the way in which institutions and companies should and are able to buy assets like Bitcoin. Because ultimately, if they own these assets, and these are assets that sit, you know, in their company accounts, okay? If they are going to be including it, they can't buy it this way because they report ultimately they report to shareholders, and they can't be seen to be doing things in a Wild Wild West way. So an ETF gives a regulated way because the fund managers are essentially regulated people. And so it's a regulated way for large investors to own Bitcoin. So what this does is it opens out Bitcoin out to institutions. So when I say large investors, I don't necessarily mean individuals, but I mean also institutions, banks, and other funds. Companies, you know, can get involved in Bitcoin, can own some Bitcoin, can put it on their balance sheets or whatever. They put it on their, you know, on their papers when they are, you know, it's basically reporting to their shareholders they have this regulatory way of getting involved in it, which currently does not exist without an ETF. So that's what an ETF opens Bitcoin out for, and cryptocurrency. Now, this is already happening. ETFs already exist in different assets, such as stocks, pension funds, and commodities like gold, like you saw with that graph. It's a $3 trillion market. $3 trillion. You know, cryptocurrency at the moment sits in the low $200 billion. Okay, so 3 trillion is a huge market, a load of people. There is demand. That is why these ETFs are being applied for, because there is huge demand on these investment institutions asking them to provide an ETF. And as you can see, it unlocks trillions, potentially trillions, into the cryptocurrency market. So what does that mean? That means new money, new and more liquidity pouring into the market. Now, at its current standpoint, you know, the market is currently experiencing about $11 billion, 15 billion. On a very, very good day, $20 billion traded in cryptocurrency on a daily basis. There's no real new money coming in. The people operating in cryptocurrency now are the people that are already in it. But it's not going out enough. You know, when, you know, what happened with futures happened last year, end of last year, that was, the price spiked as a result of that. And of course, it went into mainstream news. And of course, people were hearing about Bitcoin. They were hearing how much money it was making people, how rich you could have been if you were an early investor. And they jumped into the market. And there was a new group of people, fresh blood came in, more liquidity poured into the market. But we've not had that since. And in fact, we've had people leaving. So new money, new liquidity is needed to make the prices of cryptocurrencies and Bitcoin go up. Once people get into Bitcoin, they then get a flavor. They get bitten by the bug, and then they get into cryptocurrency, and then they start buying other cryptocurrencies. It's a long-term instrument, as opposed to futures. Futures is a short-term instrument, right? You are gambling. You are taking gains as and where you can. Whether the price increases or decreases, you are taking gains where you can. It's very, very short-term. And as such, nothing lasts in the current market. Everything is going up quickly, down quickly. Okay, but it doesn't move into a different level. It doesn't go anywhere near where we got to November, December time. It just doesn't even touch that. So this is a long-term instrument, okay? This is allowing people that want to get into cryptocurrency, that want to be a part of this revolution, be one of the early adopters. This is a way of doing it. Okay, so it's a way, in order to maximize profits, not make the stupid short-term profits, but in order to really maximize the 20x's, the 40x's, the 60x's, the 100x's, the 1000x's, the way to maximize profits is through a long-term instrument that has long-term thinking, that really makes you want to achieve results rather than these short-term pumps, which don't really get you the gains that long-term holding gets you. What else? It's also got the custodial, insured, and backed features, okay? So custodial, you know, institutions don't want to get involved in the rigmarole. They don't want to be open to hacks. They don't want to be setting up a Coinbase account or going on Kraken or any of that kind of stuff. They want to own the asset with as little issue as possible. Okay, so they just go someone that knows how to do it. They go to a professional that knows how to do it. And of course, it's insured. And that is one of the biggest, you know, that's one of the biggest risk mitigation tactics you can have. In cryptocurrency, still a very early infrastructure. And so therefore, there isn't the security that's needed. And so therefore, having insurance is a massive quality. And of course, it's backed by actual assets. It's backed by actual Bitcoin. That could be one of the reasons why the price is suppressed at the present time, around about the $6,000 area, to actually allow these funds to actually have the requisite Bitcoin to back the shares. This could counter market manipulation, okay, because it increases the liquidity. It increases the number of players in the market. At the moment, you have got some key players, really the whales in the game. The ones that really understand what's going to happen before it happens and cash out when they do. And everybody else falls victim to that, all right? And but with the lack of liquidity, it's easy for that to happen because there's nothing that's protecting all of the investors, because the liquidity, the amount owned, is really sitting with the wealthy. And of course, by selling, you're almost giving back to them cheaper down the line, because while everybody else is fearing, they're buying. So by adding more big players, by adding more liquidity, it decreases market manipulation, because you're less likely to have an impact when there are so many other big players, rich big players and institutions involved in the process and also bought into the process. This will enable more price growth, okay? Because with a long-term attitude, a long-term approach, this will therefore have more people buying into ETFs and taking supply out of circulation for other people to buy. That therefore increases the scarcity. Now, one of the reasons why why Bitcoin really surged to 20,000 all the way back in November, with less than 1% invested in crypto, less than 1% of the population in cryptocurrency, is because of the scarcity. Okay, as more were being bought, the scarcity increased, and so the price went right up. And this is on a small community. So imagine how more Bitcoin, more supply being bought up will increase the scarcity and therefore make the price absolutely soar. This is one of the big reasons why people say it's going to be 30k Bitcoin, 50k Bitcoin, 80k, $1 million Bitcoin. It's one of the reasons. Market exposure. With the prices going up, of course, it's going to be written about in the news. It's going to be on Sky. It's going to be on mainstream. It's going to be everywhere. Every bloody article in newspapers, on online media, everywhere is going to be saying Bitcoin goes up 20k, Bitcoin goes up to 30k. And of course it's going to be written about, and more new blood is going to come in, more new money, more liquidation, essentially. One of the big reasons why the SEC is against putting an ETF, well, this is actually one of the solutions. So it would be, you know, December 2x or more with what would happen with an ETF being approved. And then legitimacy. Okay, one of the big reasons, if you talk to your normal layperson on the street and you ask them, are they in cryptocurrency or Bitcoin? They'll say no, because they see it as having that negative stigma, used by criminals, used for tax evasion, used to buy drugs on the darknet, and all this junk, right? An ETF would add legitimacy to the space, because it's almost like a stamp of approval. The SEC say, yes, it's safe. It's almost like saying, yes, people can get into it. Large institutions can buy into it. It increases the trust, it increases the credibility, and therefore the overall legitimacy of the space, Bitcoin and cryptocurrencies, and then starts to fade away from this negative stigma and starts becoming like the internet, where the internet wasn't seen as a fad or seen as negative like it was in the very early 90s. There's a third page. So, more ETFs will open out when one is approved. Once one is approved, it opens it out, because everybody will therefore have a model by which to base their ETF application on. And so you're going to get an Ethereum ETF, you're going to get a top 10 ETF, you're going to get mixed bags, you know, bit of privacy coins, bit of infrastructure coins, a bit of platform coins, utility coins, you know, and that is what's going to really help everything else come up with Bitcoin. Bitcoin is obviously going to be the first to benefit. But then everything else will start benefiting, because there'll be more ETFs. More ETFs will be approved because one got through and others will try and get through using the same model. And of course, what these large institutions do is they use it as hedging, because there are falling markets. You know, there is a danger and a risk. There's lots of negativity out there as to, you know, some of the stock markets really going to tank, bubbles bursting, you know, value plummeting. And of course, cryptocurrency, really, being in its early stages, has all of the potential to grow, while stocks, which have been around for decades and decades, they're not the instruments they were. You know, they are either quite static or really going to plummet, because the big boom period has already happened. You know, stocks back in the 60s is what cryptocurrency is now, okay? People are at the beginning stage of it, and now is the time to ride it. So it therefore forms the perfect hedge, the perfect, you know, risk mitigation to invest in cryptocurrencies whilst other things fall. And then, of course, what this will add, which is both negative and a positive, is increased regulation, increased protection. There'll be more frameworks added to the existing structure, which makes it easier, more trustworthy for everyone. But at the same time, could turn it... Well, I'll tell you more about that in the negatives. But this is going to be bringing increased regulation and protection from the SEC and from various governments. This is going to increase partnerships, okay? Because by bringing credibility into cryptocurrency, other institutions and corporations that currently aren't in, you've got the IBMs, you've got the Microsofts, you've got the Starbucks. They're all interested, okay? They're all already in it. But you haven't got other corporations, ones that actually would be great partners for some of the startups we see in cryptocurrency. With an ETF, there would be that trust layer. They would be more inclined to get involved and also more inclined to get invested in the overall market. So this would basically completely improve the cryptocurrency market and improve people's well, I'll move on to the next one. Small caps are likely to thrive. So some of the cryptocurrencies you see right now, they are surviving right now without having big partnerships from people outside of cryptocurrency that don't want to get into cryptocurrency. But with an ETF, it brings that legitimacy into the space, which will bring more corporations to partner with them, and therefore small caps have that ability to 20x, 30x, 100x in time. Because let's say, for instance, BitDegree and Udemy. So Udemy may not want to partner up with BitDegree because they don't necessarily see cryptocurrencies as safe. They don't see it as a safe market or a legitimate market. But with the introduction of an ETF, it would add that trust and legitimacy. So Udemy may think, you know what, we want to improve our chances of thriving with cryptocurrency, so would partner up with BitDegree. That's just an example of what could happen. So that is the current positives of an ETF. Now, what are the negatives, in my opinion? Well, they are as follows. Potential continued and stronger market manipulation. This is what I would call the misinformation out there. Okay, which is that, again, basically this will be 2 times worse than the whole futures coming into cryptocurrency. Okay, so what they're saying is that actually this is going to cause more market manipulation because they're tradable funds. Okay, and so people can sell at any time, and actually with more big players, this could increase manipulation. This could increase price drops. This could make price drops even more harsh and severe than they are at the moment. But looking at what I have talked about on the counter argument, which is there's more big players, there's more liquidity, it's much harder to actually manipulate prices. Okay, and again, with ETFs being a more long-term thinking instrument, people are going to be less inclined, because it's not like shorting, it's not like futures, it's not like BitMEX where people profit from the shorts. Okay, people will essentially lose money from basically selling a long-term instrument, selling their share. Why bother? Why would you bother? If the whole point and objective is long-term thinking, why would you short to hurt you and the whole market? And to be honest, why would you short when there's so much more liquidity and actually you're more likely to just lose rather than drop the price? So that's what I personally think, and I think that is going to be the case. The holder does not own Bitcoin directly. So this was Andreas Antonopoulos' argument, which is that basically they don't have a private key. They may not get the forks. Really, fund managers are there to take the ownership, to hold it, to insure it, but also to give the profit benefits as well. So should a fork happen, hopefully they are managing it in an area by which they could actually get forked cryptocurrency, but they may not. Okay, and that is potentially one of the downsides. It decreases rights by directly having Bitcoin, by directly being able to have a say on the infrastructure and the blockchain. But no one really exercises them. I mean, let's face it, probably less than 0.01% gets involved in any of that. They are holders and they just stay holding for the profit benefits. So as far as I'm concerned, just by holding for the purposes of getting gains, I doubt that the rights that people get are going to outweigh the potential rewards. The only real area is the forks, and that, I think, is an area which I think would be managed somehow, but I don't quite know. Increased regulatory and legal framework. Now, I said this was a positive. This is a potential negative as well, because this is where you're going to see regulation. You're going to see law. There's not going to be wild, wild west so much anymore. Okay, the ability to just buy and own within, you know, a few minutes. You know, so with increased regulatory and legal framework, you make cryptocurrency a more serious business. You make it bogged down with regulation that could impact the agility that you currently have with cryptocurrency. And as such, could turn cryptocurrency into the stock market, where it removes the volatility, which we really do want. But what I mean by volatility is the ability to make 100x's, 200x's, and actually turn it into the stock market where you make about 10% every 5 years. Okay, so that's one of the potential dangers of cryptocurrency moving that way. I've always been against regulation for that standpoint, in that it removes the freedom, okay, and could actually have people that's not really been involved in cryptocurrency having a say over how decentralized as a world we can be. So those are the potential negatives, and of course an increased chance of a bubble burst, okay? So if cryptocurrency has a dot-com boom, where it's hot for one particular time, people invest in everything and anything, they get into their mixed bag ETFs and invest in a load of cryptocurrency, some small caps, some medium caps, and then all of a sudden the bubble bursts because, you know, that's when there's the big cull, some die and some survive. Then with more money in and with the price skyrocketing, it can actually make a more severe bubble burst, you know, where it goes really high with all the investments that's been made and then tanks dramatically like the dot-com boom. And I guess that is a possibility if cryptocurrency kind of goes cold, if people are like, right, okay, I want to get back into stocks, or I want to get back into another commodity. There is that ability, but I think that it will take a while for the bubble to burst. However, if the bubble bursts, it could be a lot harsher than without ETFs. So, with all that in mind, my final rating is an ETF deserves a 4 out of 5 stars. Okay, it's got some negatives. There are potential downsides of an ETF, which I've just gone through. However, on the overall outlook, it's very, very positive. Okay, what this would add, the liquidity it would add, the bigger players, the legitimacy, the frameworks, all of these will make an industry thrive rather than die. So therefore, the outcome's positive. Now when? Well, take your pick. As far as I'm concerned, the CBOE application has the best insurance and has the best value proposition, and the CBOE, who has a very close relationship with the SEC, as a bonus, kind of like as all the positives that give it the best chance. The ProShares ETF does not have that. All right, so and it also is not backed in the same way. I believe it's backed by futures, which actually is the worst possible thing. So therefore, a decision is either likely, in my personal opinion, next month. I'm 65% sure, but I'm almost 100% sure it's going to happen the beginning part of 2019. So that is what I believe is going to be the state of play with cryptocurrency. So let's have a look and see what you guys think. What do you guys think overall? Are you for or against an ETF? Let's have a look. Thank you, Karan. I really appreciate that. Does ETF regulate mean centralizing? Well, no, it doesn't mean centralizing in any way. It doesn't affect the cryptocurrency and how they operate. Really, what it does is it adds a regulated way by which Bitcoin can be acquired for large institutions, and they can't actually get involved in cryptocurrency in its current state. They can't. All right. It's an area that needs to be opened out. All right. It really allows your average individual like you and me, or your average whale who's got a lot of money that wants to put it in Bitcoin, to get in, but not the institutions. The institutions really want to get in. So it needs to happen, really. Let's see what else. Lots of people for. Let's have a look. SEC has few. Didn't get that. Hi, Rowan Seth. There's your shout out. You see, the thing is that does it need to happen? No, it doesn't need to happen. Cryptocurrency can just kind of continue, you know, on its gradual increase. You know, it can just keep on going up and up and up from straight to straight. But when you see something like this was not natural. This was unnatural. This was turbo bulls. This was as a result of futures. Would never have happened without it. Okay, so, and then it just created a FOMO rally as a result. You're not going to get this without an ETF. Simple as that. You're not going to get this without an ETF. Or without something like an ETF, something that significant, okay? So really, going back to this chart here, something like an ETF would take it to that next level. So it doesn't have to happen. You know, it could just gradually go up and go up and go up and take a similar trajectory as gold, which took ages, really, to keep spiking in value. As you can see, this is over the course of decades. This is 1980, for God's sake. But yeah, an ETF, if you want turbo bulls, if you want turbo bullish momentum, then yes, an ETF really is needed for that. Thank you, FOMO3D, Superman for President. I agree with that. Smash up your old likes, by the way, peeps. Bear with me. Just need to get rid of some knobs. What about Electroneum and BACT? I don't know what you mean by Electroneum or ETN. But BACT, I think, is also really significant because BACT is very, very similar. It's a very similar instrument because it's an exchange, essentially, it's an exchange that has the regulatory framework for big institutions to come in. So it's quite similar. And like I said, like an ETF, you need something significant like that. And that's happening in November. You need something significant like that to really open out the market, yes. Yeah, I know Crypto Chick. I know you love ETN. I certainly know that. Anything others? I think that basically it's mainly on the yes side. But the thing is what you've got to remember is that ETFs will bring up the overall strength of the market, okay? It will bring up the overall health of the market and make everything do well ultimately. And I think that, you know, moving into a next iteration, I mean, you've got to look at cryptocurrency as a story. Okay, you've got to look at this in its entirety, okay? You've got to look at way back. This is one aspect of the story, okay? So we had one big part of the story last year, but that's not the most, in my opinion, it's not going to be the most game-changing. It was just something that showed the potential, particularly with the scarcity of Bitcoin, what can happen with price. And of course, it brings everything else up ultimately. However, you need something else takes it to the next level, because really it's the institutional parties that need to get into cryptocurrency properly in a way which is completely kosher and legitimate for them legally. So it's needed. You know, you can be selfish and say we don't need it, but they need it. You know, they do need it. And looking at, you know, the positives, it seems as though by having them included, it makes the overall health of cryptocurrency thrive. So you can't really, it's very difficult to argue against that. Anything others? What's going on here? Looks to be like loads of people are hitting on Lisa Marie or something like that. Anything else? Anything others? Nothing else, really. Nothing else. Nothing else new. So, anyway, I hope this has clarified it, because I think there is a lack of information, even what an ETF is, let alone what it brings to the market, and what it can do for the overall health of the market, and what it can add in the next chapter in cryptocurrency. Look, this is the story. This is the story. We've gotten to this point because of institutional interest, you know, with the futures. And now we need for it to go to another level where we've actually got the long-term aspect. You know, I think a lot of the reason why there is FUD or people against it is because of fear of the unknown. You don't know what's going to happen, if it's going to benefit. You know, futures has had a disastrous impact on cryptocurrency. I mean, there's no denying that. It's been disastrous. It has really not worked out for any of us who have been in at this level, okay? If you get in today, perfect. But if you're not, which most of us haven't, most of us have been around for a while, then it is a case of, unfortunately, we've been burnt by, you know, an instrument as significant as futures. So I understand the hesitance, but it is required, because you've got to think about it. Otherwise, there's no real way of large institutional buyers getting in. Otherwise, they get in in an unregulated way, fall victim to scams, and actually do even more damage. So this is a way of getting a long-term liquidity, and not only that, but getting more safety in cryptocurrency in many aspects, but also from a market manipulation standpoint, because market manipulation is what's got us where we are exactly today, why we've had such an incredible increase and then a very sudden decrease. It's all because of that, you know. So, you know, what's the lesser of two evils? Staying here forever or going up? That's really what you've got to ask yourselves. Anyway, peeps, I think that's it for today. I hope you've enjoyed. I hope it's educated you. And I'll see you next time. It is lights out, all out. Da 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 da.